Good afternoon and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And joining me live from the MarketSite is Bill Belden. He is the head of ETF Business Development over at Guggenheim. Bill, I want to welcome you to the MarketSite. Thanks for joining us today.
Great to be with you, Jill.
Let's talk about getting bond-like exposure via ETF packages.
Great. So we did some research into what investors were really looking for in terms of trying to get the best aspects of owning an individual bond with owning a bond fund. And almost 7 years ago, came up with some indices that we call the bullet shares indexes that really wed those best attributes of owning an individual bond, like a final payment at maturity, ongoing distributions, real precision around your duration and your credit profile, and tie those into the best aspects of owning a bond fund or ETF, which is the transparency, the diversification, similar income streams, and the efficiency of transacting within ETFs, as well as the cost effectiveness of transacting within ETFs. And we brought those together and came up with the bullet shares ETFs, which we launched in 2010. And these products deliver the effective duration of individual years ranging from 2017 through 2027 for the investment grade corporates and 2017 and 2025 for high yield corporates. So investors have really gravitated towards these products. We have over $9 billion in assets under management right now, and they really found a lot of applications for how that can fit their fixed income needs.
Well, it's really interesting because we're in a historically low interest rate environment. So what's Guggenheim's perspective on the rate environment going
forward? Sure. So our current outlook is a rate increase coming in December and 3 more coming into 2018. With a recession somewhere around the end of 2019, 2020. So as we embark on what we believe are the early stages of a rising interest rate environment, we believe that bullet shares ETFs can really help mitigate the interest rate risk associated with rising rates. In particular, employing a laddering strategy has proven to be a very effective way of navigating fixed income markets, particularly in rising rates. So bullet shares are a great tool to implement bond ladders.
All right, and finally, how else can these be used in a portfolio?
Well, in addition to the laddering applications, people can use them for lifestyle planning. So whether it's college education, whether it's retirement, whether it's real estate, we're starting to see investors adopt them in different uses beyond just bond laddering. As well as filling gaps within fixed income portfolios. So just getting replacement bonds for bonds that are maturing off has proven to be extraordinarily difficult with low bond inventories currently, and using something as efficient and effective as a bullet shares ETF can serve that purpose as well.
All right, well, thank you very much for joining us at MarketSite. And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.